Are you looking to purchase an investment property in the UK? If you are, this video is for you. What I'm about to share with you will help you understand the exact tax you pay for investing in a property within the UK. Hey guys, my name is Rahim. Welcome back to my channel. If you're new here, smash the subscribe button because I talk about property investment, personal development, and how to gain financial freedom. Before I get to the video, I'd like to thank each and everyone who subscribed to the channel. The channel is growing immensely. We literally skyrocketing. It's absolutely amazing and good feelings to see the channel is growing immensely. We've done a research, we've realized it's going down actually. 45% of the people that are watching our channels have not hit that subscribe button. If you are one of those, I kindly ask you to smash that subscribe button right now to join the family. And here's the promise I'll make to you. I'll ensure I provide you with valuable, actionable content to allow you to take your finances into your own hands instead of relying on your employers. And also, I will be inviting amazing entrepreneurs, influencers, business people to shine a light on how you can start and scale your investment as well. So let's get to it. You see, in order for you to invest in the UK, you are going to be asked to pay tax. So any property you buy in the UK for investment purposes, you'll require to pay tax. And each countries or regions within the UK has different set of taxes to pay as well. And they tend to call it differently as well. So in this video, I'm going to share with you the name of these taxes each country calls it, how to calculate the tax on a step-by-step basis, and what would be your total tax to buy in a specific property. And most importantly, how to mitigate the tax you would pay, and in some instances, to eradicate it altogether so that you do not need to pay that tax legally, not illegally. In order to buy a property legally in the UK, you would have to pay a stamp duty tax. Each of these regions call the tax you pay for buying properties or land differently. So let's start with Wales. In Wales, the tax you pay for buying an investment property or a property and land is called land transaction tax. In short, it's called LTT. So let's start with Wales. So in Wales, any property you bought for £180,000, you are liable to pay to the government 4% of the £180,000, not the deposit or not the borrowed money from the lenders. It's the actual value of how much you've bought that property. And what I'm talking about here also is about investment properties, properties that you're buying with the intention to rent out. I'm not referring to your residential property where you're living in currently or that you're looking to buy to live in. It's a complete different way of calculating the tax on that basis. But this video is purely talking about the tax you pay if you were to buy an investment property in the UK. So with the £180,000 at 4% tax, that would have been £7,200. So once you've bought that property, upon completion, your solicitor would ask you to pay that £7,200 to their account, and they will then pay that £7,200 to the government. In essence, that is your entry tax for investing in properties in the UK. So let's now move a little bit further. Suppose now the property you're buying is between £180,000 to £250,000. So the difference between the £250,000 to the £180,000 would be the tax you would need to pay as an additional tax. So in essence, the difference between the 250 to 180, which is the £70,000, you're liable to pay 7.5% of the £70,000, and that is £5,250. So in essence, if the property is 180, you pay that amount. And suppose the property is 250, you pay an additional of £5,250. That gives you a total of £12,450 you would have paid if that property worth £250,000. Now we move on to the next step. You see, we're going through steps here. Okay, there are stages. So the next tax we will need to pay is the additional amount between £400,000 to £250,000. So if you minus £250,000 from £400,000, the differences between those two amounts, you'd have to pay 9% of that amount, which would have been £150,000. So 9% of the £150,000 is £13,500. That's the additional amount you would have paid to the government in Wales. So if your property is £400,000, you would have paid £7,200, £5,250 plus £13,500. That would have given you a total of £25,950. So if you were to buy a £400,000 property, that would have been the tax you paid to the government. Moving on to the next part. So we're now moving on to the third step, and the third step would be the property that is purchased at £750,000. So the tax you would pay for a property between £400,000 to £750,000 would have been 11.5%. The amount you would have paid is the difference between £750,000 to £400,000, which would have been £350,000. So 11% on the £350,000 is £40,250. Okay, so you can see it's in steps. So you pay tax on the additional amount, not on the whole sum of the actual value of the property. So it goes in steps. So if you were to buy a £750,000 property in Wales, based on the current tax bracket, your tax you would have paid to the government would have been £66,200 for buying a £750,000 property in Wales. Moving forward, okay, suppose then you're looking at a £1.5 million property in Wales. You would have, I know you may not have that, you may not have got to that point, but what I'd like you to note here is how much you could have or you would have paid if you were to invest a property at that price. So the differences between the 1.5 million to £750,000 would have been £750,000. So the 14% of that amount would have been £105,000. So you would have paid £105,000 for that property worth 1.5 mil. So obviously anything over 1.5 mil, you're talking about 16%. So let's stop at 1.5 mil. So if you add all these figures up together, from 80,000, you've got your 7,200. From 180 to 250, you've got your 5,250. From 250 to 400, you've got your 13,500. From 400 to 750k, you've got your 40,250. And from 750 to 1.5 mil, you're talking about £105,000. So if you put the total tax together, it would have been £171,200. In essence, the tax you would have paid for buying a £1.5 million property in Wales would have been £171,200. That money literally goes to the government. No if, no buts. As long as you're buying that property, you pay for that tax. Listen to this. The reason I'm sharing this, I've seen so many investors lose deals or buy properties that becomes a rope on their neck only because they forgot or they did not know how to do the calculations to ensure they pay the correct tax, or even to find out whether that property is worth investing in the first place. They get a completion statement from their solicitors only to realize they need to go and find another £15,000 to pay in taxes. So I really hope this has shined a light to you and gets you to understand exactly how to calculate your taxes in readiness for buying and investment properties. The key things to note here, the calculations we've done here is based on investment properties, properties that you're buying to rent out, not to live in. It's a complete different calculations to buying properties to live in. Sometimes the government have some leeways, they have some exemptions, they have some certain things around it. But these calculations here are purely based on buying investment properties in the UK. I hope this video has been helpful. If this video has been helpful, smash the like button below, subscribe to my channel for more amazing tutorials. I look forward to sharing the next one. Thank you.